Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Yeah, why don't we start with Redfin? What's the background here? What are we looking for from Redfin? Because they got a lot of pieces of the business that, kind of pull together in their housing related business, but what are we looking for?
So I haven't looked at the stock after hours. One of the things that we've tried to do with these, Travis, is to go into these with as clean of a slate and as limited amount of bias to what other people are saying as we can, so we can try and give a relatively authentic reaction. But I'm going to admit, I did, when I was searching for Redfin to find the website to get the release, I hit enter too soon and I saw the news. So I do know that they have announced that they're folding Redfin Now. This is important to talk about first because Redfin Now is Redfin's iBuying business. If we go back about a year ago, a little more than a year ago,
yep,
iBuying was all the rage, right? You had Zillow that had made a major pivot and was making, like, they had a few years before that, they had made iBuying like their cornerstone for their next phase of growth. Redfin had started doing it. Open Door, other companies had gotten into basically the house flipping business, essentially, is what it is. Redfin just said they're getting out after. They basically, when Zillow got out, it's like, okay, time for the pros to show everybody how to do it. And
I think that was what a lot of people thought. Yep.
Right. So now they're exiting that business as well. Again, I haven't seen what the stock is doing in after hours, but I can tell you before today, and I bought some Redfin last week because I believe the company's going to get through this downturn and it's going to be fine. And there's a tremendous upside, but I think there's a good chance that stock is probably getting killed based on that announcement, or maybe the market's going to love it. We'll figure that part out later. Let's talk about the numbers. I'm going to share some slides, and we're going to start right at the top here. So give me a second to pull up the highlights from the quarter. So a couple things. So real estate services revenue came in at $212 million. You got to remember, Redfin's biggest business, their most important business, they're an online brokerage, right? They have agents. They have a differentiated model. They charge lower commissions. They pay their agents a little bit different. And so that's a really important part of their business, and came in ahead of guidance. The company guidance, right? $212 million in revenue. So that's positive. Another thing, market share is up a very small amount, but again, I think that's a real positive. I've wanted to see from Redfin for a long time, taking more market share. So they're showing that. They're kind of backing into it right now, Travis, because activity in existing home sales has slowed substantially. More traffic on their website. That's good. They're putting more agents in more places. Again, that's good. That's that expanding listing coverage. Mortgage attach rates. That's good, but there's also some risk here, Travis, because if they're starting to hold, if you look, we'll get to their balance sheet in a little bit. They're holding a lot more mortgages on their balance sheet now than they did at the beginning of the year. And there's a certain level of risk attached to that we'll talk about later. But they're growing other things too, like their rentals business. And as we're going through a housing downturn, a housing sales downturn, listing rentals and generating rentals income could be a positive way to continue to grow. So they continue to try to differentiate, and they continue to make some progress. So I think it's important too, if you look at the revenue cadence. So revenue was higher than it was in the year-over-year quarter, but it's basically back to like 2018 levels plus a little bit, right? And especially when you look at that properties business right here, that's the part that's going away. They're basically back here. They're back to 2018 levels in terms of the size of the business. So that's some important stuff to talk about. I'm just going to move through a couple of charts here, and I want to get to operating expenses because this number started to come down. This is a cash flows business. I've done some other videos talking about it, Travis, and they've been burning cash this year, right, as they've tried to leverage up and scale up. And it's really good to see that those operating expenses are coming down. So they announced they're folding Redfin Now. There's hundreds and hundreds of people that Redfin is going to be letting go as part of that. So what we don't know is how much of that is going to affect future guidance. Here's the outlook right here. So again, this is for the fourth quarter. I don't think, they didn't give us a guidance for 2023. But let's talk about the end of the year, kind of go through this. First of all, Travis, there's nothing here that surprises me. Okay. This big revenue decline because they had quickly accelerated and built up this iBuying business. They're folding it. It's not a surprise. And
by the way, the revenue that comes from that business, because you buy the home and then you sell the home, so you don't take, your 7% commission as revenue. You take the entire value of the house as revenue. So
right,
that's why a massive decline in revenue at a Zillow, at a Redfin is not that surprising when they get out of the iBuying business, because what you want to look at is how much money were they actually making, and the answer was none.
That's the thing. The idea was at scale that this would be large revenue. Using leverage, you can get really good return on your actual cash investment by using leverage at relatively low actual margins, because again, it's a house. So again, that this business is shrinking. There's no inventory. It's a tough spot in the market. They are saying we're going to grow that rentals revenue. And again, this is a kind of it's terrible to say, but it's the reality, is that in weak economic conditions, the rentals business can be a little bit better than the selling of homes business, because people still need somewhere to live, right? So the mortgage business, again, they're still expected to lose money here. There's a little bit of balance sheet risk we're going to talk about there. And there's some intercompany eliminations that are going to kind of affect the bottom line a little bit too. Going to continue to lose money, right? We know that that's going to continue to be kind of the reality right now. Travis, any thoughts while I get over and start getting ready to share the balance sheet information?
No, I think the question that I have in this space generally is, what do we do as investors? Because I think the housing market is going to go, we have been in 40 years of structural interest rate declines. And now what happens? I mean, interest rates are up, have almost doubled in the last year or so?
I think you'd say more than doubled.
And so that means that and
they're on track to continue to increase based on what Jerome Powell's saying.
Yes. So now you're talking about buying the same home. If you're going to buy a home with the same monthly payment, now that home is suddenly worth, just based on the math, 30, 40% less. Now that doesn't happen that way in the housing market, because people can just decide not to move. I mean, I have a 2.8% interest rate. I'm not moving anywhere anytime soon.
Right.
So I think there are a lot of people like me.
Same. Yeah.
And it slows everything down. And if you're Redfin, what you're in the business of is transactions. It's not just
the other part of it too, Travis. We talked about the margin profile of that business. It's big revenue dollars. Low margins can make big profit dollars, especially if you're using debt to get a little bit of leverage benefit. The risk there is it's like being in the steel industry or one of these other high fixed cost industries. When the demand cycle turns and the value of the product you're producing falls, and you've built these high fixed costs, like if you have a ton of houses on your balance sheet that you paid a price for, if the market freezes up and prices fall just a little bit, and you're still servicing debt that you've taken on for leverage to buy those properties, a nice little profitable business can get ugly and unprofitable really quickly. In the press release, Glenn Kelman, who I will tell you right now, he's one of the CEOs I admire the most. He really is. He said, laying off 862 colleagues and friends is heartbreaking, but I feel relief about closing Redfin now with relatively low losses, right? So it's obvious this is a management team that sees the cycle turning and realizes we have to make a decision right now. Look at our balance sheet, look at our working capital, and this is something that we cannot put off. He goes on a little further and says, we're profoundly grateful for the dazzling entrepreneurs who built that business on a knife's edge, right? And that's the thing. The balancing act is so challenging here. I'm not surprised this is it caught me off guard a little bit, but thinking about it, I'm not surprised that Redfin's doing this, because they have enough other businesses that can be profitable and don't need to be leveraged, right, Travis?
It's the exact same decision that Zillow made a year ago, is the way that I look at it. I mean, Zillow was taking a much, much bigger swing at iBuying than Redfin was, but they went through the same analysis and went, oh my gosh, when we have this much leverage on the balance sheet, when our hopeful margin is 3-4% on a $500,000 home, if the market falls out and we've got $10 billion worth of inventory, and now we're suddenly in the red on all of that inventory, and now we have to unload it, and everybody, and the market freezes. I mean, if Zillow wouldn't kept going with the iBuying business, they would have been in real trouble today. And that's, I think, something that all these companies are coming to terms with. What I wonder, though, and this will take a little bit longer to process, is does this leave an opening for smaller, more nimble companies like Opendoor, OfferPad, I think is the other one, to just say, hey, this is what we're going to do. This is the niche that we're going to serve. We're not for everybody. We're not trying to buy every home, but we know what we can do well. And, I haven't dug into that business in a while, but, a year ago, Zillow was doing, let's say, margins of 8%, and OfferPad was doing like 15%, because their businesses were just fundamentally different. They were, they were doing more rehab and things like that. So that could be really interesting, because there is, I think, a case for, hey, I want to sell my home and I want to sell it right now, and I don't want to deal with 50 showings and having to clean the house every day and all of the hassle that goes with selling a house.
Yeah. Yep.
And
let's face it, Travis, what we've seen over the past couple of years is an abnormal market, right? Where there was such tiny demand and such tiny supply and massive demand. You didn't really have to do much of anything, and you could get a premium price and multiple offers above what your listing was and sell it quickly on your terms. That's probably not going to be the case going forward, because it's really never the case for an extended period of time in the housing market. In a normal cycle, you have to do work on your house, you have to paint things, you have to fix it up, and it takes months, right? And there's real negotiations where there's give and take, right? Not you just standing there with your hand out, waiting till somebody puts the amount you want in it, and then somebody else goes and puts 10% more, right? So that's the reality. I'll tell you this, though, OfferPad and Opendoor stocks, I mean, they're penny stocks at this point, right? So the market doesn't believe they can do it. The challenge, and this is the thing that I've said this publicly a lot of times, I've never been a big believer in the iBuying business at scale, because when it comes to real estate, and that is such a transactional business, you're not buying real estate and owning it for the income it generates as a rental property, right? You're flipping it. You need so much expertise. You need to understand the market you're operating in. You need to have skilled tradesmen that you can call and they can be there the next day. Right. And building out that infrastructure in a highly cyclical industry like single family residential housing is difficult to do in one town. Right. And to try to do that in, a couple of dozen states.
And then there's like micro segments inside of a town.
Yeah. Oh yeah. Yeah, absolutely. I mean, that's the bottom line. Everybody knows, right? You have different economic strata in the same town, like you're talking about. You have these micro environments. So I think this is the right decision for Redfin to make. I'm not going to look at the stock price because, like I said, I bought last week and I don't want to know. Let's talk about the balance sheet here, Travis. I think this is really important. And I know we're going to need to get moving on to some of these others, but I think this is really important, because if you're a Redfin shareholder right now, or you're interested in owning this company, the reality is that there's probably going to be a lot of living off of working capital in the near term. Because if you look at the statement of comprehensive loss, so this line right here, a loss from operations, the operating loss, $245 million, the first 9 months of the year, substantial operating loss in the quarter. And the numbers are going to get probably, I guess, exacerbated is a way to think about it, because now with these layoffs in the fourth quarter, there's probably going to be a lot of severance expense.
Yeah, I think the guidance was for a pretty significant loss and an EBITDA loss as well.
Yeah, right. And so that's the reality. So that's happening at the same time that your primary business, the number of houses being sold and the income you're going to generate from commissions is falling. But here's the 9 months ended operating cash burn so far this year, $149 million. So that's coming down, right? That is coming down compared to the year ago period when they were burning a ton of operating cash trying to get to scale in that iBuying business. Now let's look at the balance sheet, because again, there's the fact that you're burning operating cash. What do you have? So roughly 1.2 billion in current assets. That's either cash or things that you can convert to cash relatively quickly, compared to current liabilities of $645 million. So that's well over 600 million. Well, a little bit less, excuse me. That's a little bit less than $600 million in working capital. That's a pretty sizable margin of safety, Travis, I think, for a company like Redfin going through this downside of the cycle. Here's one risk. We mentioned this, that the fact that mortgage attach rate that they talked about, went from, $36 million in loans held for sale at the beginning of the quarter. Now it's $256 million. The thing that I don't know, and I'd need to look at the cadence of their quarterly reports to see how this number's changed over recent quarters, are these mortgages that were wrote at substantially lower rates than mortgages being written at today? Because if rates continue to move up, that's going to drive down the value of loans on its balance sheet. And if the company determines for the company, and it's holding them for sale, right? The plan is to sell them, but if the market could drive down the value of that. So that's the book value. It may have to sell them for less than that, right? So there's a bit of a risk there.
Question for you, and sorry if you touched on this, but isn't one of the differences in their business model versus competitors that they're primarily compensating their employees with salary as opposed to based on commission? So doesn't that give you operating leverage in good times and operating leverage in bad times, which when revenue is declining can be bad for margins in the bottom line?
So their sales staff, this is important, right? So they have this model where they charge a lower commission to sellers, right? And then like you said, they pay a salary to their sales staff. And the typical model for a real estate agent is 100% commission, right? And they have to pay desk fees to their broker they work for, right? So you're actually paying somebody to use that office.
This is why Buffett loves the business. He owns the local real estate place here. Yeah.
Right. So it's a good business, right? So needless to say, it benefits the brokers because their costs are exactly related to properties being sold, right? And if a property is not being sold, they're fine. It doesn't affect them. And that's a challenge, could be a challenge for Redfin. The other part of the conversation, though, is that Redfin's agents on a per agent basis sell more homes, right? So,
so they're more productive.
More productive.
The business model works. I'm just trying to point out that there could be a downside in a downturn where. Oh yeah,
it's going to be, again, that's back to that steelmaker, Travis, back to that steelmaker comparison of fixed costs. When you pay your salespeople a salary, you have a higher fixed cost, right? And the reality is, if volume falls substantially, the decision they're going to have to make is like the employees that are part of Redfin now that they're getting rid of because they're closing that business. You're going to have to start laying off agents. That'll save you money, Travis, but the risk there is when the market does turn, Redfin needs to be in a position to quickly take advantage of that turn. And if you cut your staffing back too much,
it's going to be
you can't list the properties that people are coming to you to list. So there's a real balancing act right there. But I'll tell you, Travis, I have faith in Glenn Kelman. I think he's a great leader. I think he's really thoughtful about these things. And I have faith. He's been through these cycles before. So I think Redfin's going to be fine. There's still risk. There's obviously risk if you look at the fact that the stock is down 96 or 97% from the high. But I think this is like one of those opportunities to buy a stock that is so beaten down, the market has basically left it for dead, that I think is going to emerge from this in a few years fine. And 10 years from now could be 20 or 30 bagger stock. I think that's a real possible outcome here, and maybe a lot higher probability than people think.
All right. Well, I'm going to have to come back to this one and sort of rethink this market, but appreciate your thoughts on Redfin's earnings.